Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 right at about 69.50. That's up about 1.3% year to date. S&P 500 actually lagging a little bit of some of the other indices that we track. So just for reference, the ACWI ex-US, which is basically every country in the world except the United States, those markets are up on average about 4% year to date. And the Russell 2000, which is a measure of small and mid-cap stocks, is up about 5% year to date. So once again, continuing a little bit of the trend from last year where we saw small cap, mid-cap, and international outperform large cap, that trend continuing into January of 2026. I will also just mention 10-year Treasury just north of 4.25%. That's up a little bit since the start of the year. A little bit of that interest rate rise due at least in part to what we're going to talk about next, which was the big news over the weekend, Kevin Warsh being announced as Trump's appointee to potentially take over as Fed chair. And I will say that this pick is pretty much exactly what the market wanted. Kevin was a member of the Fed between 2006 and 2011. He was instrumental in crafting the Fed's response to the 2008 financial crisis. He is highly qualified. He is a professor out at Stanford Business School. He has served on Wall Street before. He is sort of, I won't say an insider, but he has certainly been around the block a couple of times, which is interesting. It's certainly a seasoned pick, and the street is very, very happy with that. In terms of his likely sort of policy response, first, I would remind everybody that he is one of 12. Just because you are the Fed chair, it means that we get to focus on you and sort of talk about you. But in the same way that John Roberts is the Chief Justice of the Supreme Court, he is one vote of 9. The Fed governor is one vote of 12, just so we're all clear. Kevin has come out of being critical of the Fed's balance sheet. Would like to see the Fed not hold as many securities as it does. So our guess is that he will look to reduce the size of the Fed's balance sheet. He has been critical of the Fed's approach to regulation, feeling like regulation, maybe a little bit of deregulation, which is obviously something that the Republicans are huge fans of. He is also typically critical of the Fed expanding its role to anything beyond sort of central banking and interest rates. So anything around, global warming or other policy statements. Kevin has said, look, this is our lane. This is where we want to stay. I think the interesting thing about this is that Kevin is typically seen as a hawk. He has come out in favor of the president's tariff policies, but he is typically seen as being more focused on inflation and less focused on unemployment, which makes it a very interesting choice for the Trump administration, given that the Trump administration has consistently said, hey, you need to lower interest rates, et cetera. Kevin, a huge fan of Fed independence, and so will likely, continue that stride of Fed independence. So exactly what the market wanted in terms of Fed chair. That appointment seems to have gone over well, the dollar strengthening by about 1% on Friday. And then perhaps more importantly than the dollar strength is what got weaker, which is a lot of these sort of fear-based assets that the dollar was going to somehow collapse or the U.S. economy was going to somehow collapse. Gold was down about 9% on Friday. Silver down a whopping 31% on Friday. Bitcoin down at about 75,000, which is a level that it did not see since last April. All of these sort of safe haven assets collapsing a little bit. I would also just note that for those of you who might be doing these things in your own portfolio, gold, silver, Bitcoin, all viewed as, in some ways hedges against the U.S. economy. There are a lot more stable things that are also hedges against the U.S. economy, like the euro or the yen or Swiss francs or the pound, or any one of a number of other non-sort of dollar-denominated obligation out there. And it's just one man's opinion, but I do think that a lot of what's been going on with this sort of gold and silver trade has been more about fear of missing out, FOMO, than it has been about seeking to safely diversify your assets away from the dollar. If that's all you were looking to do, there's a lot more stable places to put it than gold and silver. So just my 2 cents on that. Last but not least, we'll note that it is the fourth quarter earnings season right now. We've had about 165 companies, so just over 30% of the S&P 500 report. Currently, earnings coming in much better than expected, about 15.3% net earnings growth versus about 9% expectations. Revenue growth right in line at about 7% year over year. We are deep in the thick of that. We'll have about 23% more of the S&P 500 by name count-wise report this week. And so all eyes will be on earnings. At the end of this week, we'll be over the 50% mark with respect to the S&P 500. As always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.